folks, this is Chris, and as promised I'm bringing you the video on this strategy to let you know how it works. I'll try and be as brief as possible so as not to waste your time. It is based on some very basic assumptions about trading. Whenever a commodity or a currency or an indices or anything like that reaches an oversold or an overbought state, correction to that condition is about to occur sooner rather than later. And what we're trying to do essentially is try and predict when this retrace is going to occur. For example, is a retrace going to occur after this candle, after this one, this one, this one, or this one? When are we going to get that retrace? And essentially that's what this is about. And we've got this here. Is there going to be a retrace at the end of this line, at this bar, or is it going to be this one? And that's why what the system does is it tries to predict that as best as it can, so that at the end of this candle you know that it's going to be more than likely it's going to retrace. My friend taught me a Martingale strategy with this. What he does is if it doesn't come in on the first one, then he places a call on the next one, and so on until it comes in. Usually comes in, I must admit, within 3 tries. About 60% it will come in first time, and then those odds increase to about 80% or so for the second one, and then 90% for the third one. So after that I'd kind of leave it. So what I've been doing really is I've been going half stake, then full stake, and then full stake again for the third one, and then leaving it if it goes beyond that. And then some of you may choose not to use this Martingale strategy at all. In fact, I've been playing with it and find that you actually don't need to do that at all. You can, with the system, it allows you to see the market in an extremely overbought or oversold state, and allows you to come in if you're quite clever, and maybe at this point of the candle, and to take it up. So anyway, without further ado, let me show you. The first thing it uses is Bollinger Bands. You're ignoring this middle one here, okay? The settings are very simple: 20 with a 0 shift and 2 deviations. Apply to close. Okay, so the standard recommended setup of Bollinger Bands. I've made them white because they're quite important for this particular strategy. Your first signal, therefore, is the candle must finish over the Bollinger Band, either on the lower or the upper. Must finish above or below. So for example, this doesn't count really because it's left a shadow or a wick there. The second signal is this. This is a relative strength index with a period of 10. Okay. What we're looking for is it to finish above or below a 70 or a 30 line. And what you're looking for is a bit of black space between the line and the blue line over it. Okay, so this is a signal. Okay, this is a yes. If you look at it quite closely, you'll be able to see that there is some it's definitely gone over and finished over the line. Touching the line does not count. Okay, this is not a signal. Okay, it's too weak. Okay, you're looking for a specific finish over. So this is in fact a signal on 2. But let's check it against the next one. Okay, here's an interesting one. This is Dynamic Zone Rsi. You can actually download this off the net, or I can provide it for you. Probably best get it off me actually, because they are individually written. This is a custom created one, and if you open it up you can see it allows the external experts imports, and that these values change regularly, the upper and the lower band, which is a definable moving average trigger line. The RSI period is a standard 5 and the band period is 30. Alright, what we're looking for here is the same again. We're looking for a break below or a break above the line, the top line. It needs to break it. Resting on it doesn't count. Okay, you need to be able to see. What I would suggest is you look for some black space in between this the top line and the purple line, or the orange line as the case may be, if you're looking for oversold. Alright, so in this particular case here, alright, let's have a look here. As you can see, we've already seen that one. It's broke over the line, and if we continue the grid line down we can see that it's also in the dynamic zone. So therefore that is the signal, that is a signal candle. Okay, this one is not a signal candle because even though it's broke the Bollinger Band, it has not broken this 30 line. Alright, so that is not a signal. That is a signal candle, which means that on the next candle you would expect it to retrace, which it does, and you get your money. Now let's look at the continuation of this. This next candle here, okay, it clips the Bollinger Band slightly. If you take it further down you can see that it is not over the 30 line, and if you take it down even further you can see that it is no longer in the dynamic zone. Therefore that is not a signal candle. We'll take a look at the next one. If we go down we can see that yes, it is over the RSI 10 period 10 line. Alright, so that is a yes. But if we go down further we can see that no, it is not crossing this line. Therefore that is not a signal candle. We wouldn't go for that. As you can see, it clearly has not crossed that line. But if we go to the next candle, okay, we can see that it has, and we've definitely got some black space in there. It has crossed this orange line. Therefore that is now a signal candle, and this is a yes as well. Therefore you're good to take it up on the next candle, and it does, it goes up. Now before you rub your hands with glee, whereas this happens to have worked first time, okay, it's an example of where it works first time, it is not always as nice as that. Okay, these may all fall in line on other occasions, but it does not go up straight away. It is not a crystal ball. You have to be careful and use due diligence. Let's look at this other example in a bullish trend. As you can see that this candle crosses the Bollinger Band. If we go down here we can see that it has not crossed the RSI, so therefore even though it has worked out, it is not a signal candle. We take a look at this next one. It is not over either, although it is over in the dynamic zone. It is not a signal candle. And then we take a look at the next one and we can see that that has not, it's only just slightly touching it. Okay, so that isn't a single candle either. It's not strong enough to meet the criteria of these indicators. Let's just try and find something else. It does save you from a lot of rubbish. Okay, there is some activity here. Okay, let's have a look at this one. Okay, this one here has crossed the line. I'm not including any of these because they haven't made it over the RSI 10. As you can see, they all go below. Bring that up closer. As you can see, that doesn't count, it's only touching it. Okay, The first time where it goes over is this space here. So let's have a look. Is this candle a signal? Let's have a look. Let's take the grid line down. We can see that there is some black space there. So yes, that is a signal candle according to RSI 10. But let's look at the dynamic zone. No, it isn't. Look, it's below the purple line here. And in fact, it doesn't go up above the line with some clear black space in between the purple and the green line until the next candle, which, if we take it up, it's still a big yes here for the RSI 10. That is our signal candle for sure. And look what happens in the next candle. It retraces a bit. Let's look at the next candle. Goes up, finishes above the Bollinger Band. It's a yes here for the RSI 10, and it's a yes here as well for the dynamic zone. So that is a yes candle and good to take down here. Okay, so good to take down there. These don't count because they're not finishing above the Bollinger Band. So you've got, you know, those ones have worked out first time as well. These ones have not finished above the RSI 10. That doesn't work, they don't work out either. Okay, so it is quite strict, and I think it has to be. It has to be strict. Okay, these are too small and not very important, and as such, they've not really got into the dynamic zone. They've not got into the groove, as it were. Okay, here's an example where it's a bit messy. Okay, you can see here that this candle has generated a yes signal for RSI 10, and it has also generated a signal here just on the dynamic zone. So therefore that is an example where it's saying yes, take it up, but you're waiting one candle, two candles, and you don't actually get it until the third try. Okay, so I do say, you know, in most cases you get it in 3. And that's an example of where you get it in 3. If you're cute and you're clever, okay, what you often find is, if you're not really up for this martingale approach, what I would suggest you do is, at this stage, in a very oversold state, okay, where it's in this dynamic zone and it's in the zone here too for the RSI 10, I would suggest that it's going to be trying to push down but not quite getting down there. It's going to be pushing back up. So if you're quite clever, you can wait for it to come down as far as you think it's going to go and then take it up, and you would be in the money. Let's just use this opportunity to have a look at the 4th indicator, because I haven't introduced that one to you yet. Let's see if it works out in this case. You don't really use the 4th that much, or you may decide you love it, I don't know. But it's the stochastics. Okay, it's a normal stochastics 533. Period 5, slowing 3, period 3. Standard stochastics, okay? But it's got an 80 and a 20 line. And this is a 4th indicator where you're not actually, if you want to be ultra careful, what you need to do is, the idea behind this is you wait for both the red and the blue lines to go below or above. Okay, so once that red signal goes below, then it's a yes. Let's take it into account here. Let's look at this first candle again, where it was a yes here and it was a yes in the dynamic zone. If you go down here to the stocks, you can see that the red line's quite high in the middle channel and has not come down below this line. In fact, even the next candle, the second one here, whilst it's a yes here and a yes here, it's still a no here. That red line has still not come down, and it doesn't in fact get underneath until this third one. So if you're being very strict, this third one actually is the signal candle, and of course it does actually retrace at that point. So this is a nice addition to have, this 4th check, this 4th confirmation check if you like. What I like about this strategy is that it doesn't use little red arrows or green arrows or blue arrows. It doesn't have a little sort of a thumbs up or anything like that, or a yes, this is a buy signal, go for it, guys. It gives you a better representation of what the market is, because the market is not black and white, the market is grey. You'll never have a crystal ball that will tell you for sure what's going to happen next, because all indicators are, at the end of the day, is just telling you what's happened. It's not telling you what's going to happen. It can guide you as to what's going to happen, but it can never tell you what is going to happen. It's only reactive. It's telling you what has happened and what state the market is in now, what's suggesting what state the market is in now. So for me, this is the best I've come across so far that really tells me how the market is looking and what potential it has to come up, and it is very, very accurate. It's uncannily active, actually. As you can see, this bar has come down here. It's just clipped below the line here, as you can see, just for this one, in the zone here, in the zone here, good to take up. Here again, you've got three. You've got a set of three here. This one doesn't count. It's not gone above the line. This one here is clearly not above it either. This one here again is only touching. I would say it's only touching, it's not actually gone over it. Yeah, in fact this third one's a bit dodgy as well, actually. It's not actually gone over it. Okay, it's up to you whether or not, and it's nice, it's up to you whether or not you would take that on down. But that's the great thing about this, is you can decide how much risk you want to take just by looking at the state of the market. Let's have a look at this one. See, this one's pretty good. This one's, yes, a yes there. It's a yes here. And it's actually a no on this one. But as I said, you have to watch this fourth one, because it's a very strict one, and you know, if you're going to go by this one all the time, you might never take it. You might hardly ever take a signal. Here's an example where you have to wait 3 times. Okay, this one's over. There. Okay, this one's over, but it isn't in the zone here, as you can see. So you have to wait 3. Okay, I'm just flying through some of these just to... I mean, the great thing about this is it's a lot of historic data here, so you can see. Here's an example of something that's really ugly. Okay, this is why I don't like Martingale. Look at this. It's only going down very, very slowly. So you have to watch that. All these are over the Bollinger Band, but you've got 1, 2, 3, 4, 5, 6. A slight retrace at 7, if that. But these are the warning signs. Look, this first one isn't, but the second one here is actually registered as being in the zone, and it's in the zone here. Not on this one. What I would suggest is that when you've got really small candles like this, tread with caution, because it's not moving fast enough. There's not enough volatility there for it to generate a fast, a predictable retrace at any one point. It does actually cross the line here, which would actually, for this, make this one the signal. You're still waiting 1, 2, 3, 4, and this one, can you call it? Can you even call it a retrace? So my advice is proceed with caution. Like I say, you can get most of them. You can capture most of them. 90% or so come in 3 goes. Also, the other thing you have to know is that it works well on the 5-minute, 15-minute, 30-minute, whatever time frame you like. It works across all of them. Here I play 5-minute options on 24 option. It works very well on that too. But it's one of those common sense strategies, really. You have to kind of use your own human judgment along with the indicators to try and assess the market. So good luck with it. I hope it works out for you, and see you in the chat room.